Okay, everybody, it's me, Gregory Mannarino, and it's you. I love this part. When we are together, it's awesome. All right, look, with that said, people, let's talk. So, Monday, July 25th, 2022. Let's start off with the basics here. So we had a market today that ended mixed. A gain for the Dow Jones Industrial Average, a gain for the S&P 500. The NASDAQ under some pressure. Why? It's a big earnings week. That's number one. Number two, I don't think earnings matter at all anymore. Just like before. We are in a full-blown, off the freaking Richter scale environment of quantitative easing yet again, but no one wants to call it that. Let me ask you, when a central bank, just enlighten me just a little bit, when a central bank says, I'm laughing, that it's going to buy an unlimited amount of bonds, well, what does that sound like to you? Is that a free market, or is that some other kind of twisted entity which is going to push more cash into places where it has no business going into? Understand, when you have action of central banks like this, I'm talking about the European Central Bank and the Federal Reserve. They are buying it all. Under the table, you're not allowed to know about it, but you can see it with your own eyes by watching action in the debt market, more specifically, the 10-year freaking yield. So what is it called again? When central banks go on a bond buying binge, and this one is unlike anything we've ever seen, unlimited, off the Richter scale, okay? What is it called? It's called quantitative easing. It's a method to keep rates suppressed artificially to push cash back into the stock market. That's what this is all about. But don't call it QE. No. You see, you're not supposed to know that's what it is, but there's no other name for it, people. That's exactly what is happening here. This, combined with the Federal Reserve's repo scam, it's a freaking scam to trick the system into thinking that there's more liquidity than there actually is. When you have institutions passing trillions of dollars back and forth overnight, it's a game. It fools the system into believing that there's more liquid, and you know what we're going. We are marching into a liquidity crisis, period, the end. We had one before. The last meltdown in the market. Why do you think? What was the real reason, honestly? Okay, I think most of you are educated on the market. What was the real reason why the Federal Reserve was injecting a lot of capital into the financial markets? What was it really about? To free up the credit markets, which were locking. Credit freeze, liquidity crisis. And that's what we're seeing here. I mean, what the Fed is trying to prevent. Henceforth, massive repo scam, back and forth, passing cash around, central banks buying it all. They're adding liquidity to a system that is insolvent. And the mechanism must keep going. It can't freaking stop. Once it stops, and I'm telling you again, one single dollar, one, not 10, not 500, not 5 million, $1. If we can prevent a central bank from issuing $1 of extra debt, the system, it implodes at that exact moment. You want to take down central banks? That's how you do it. Every single day, a central bank is called upon or allowed to issue more debt in the form of fiat currency. You know, you don't own these things. They're owned by the issuing central bank. Owed back to the issuing central bank, plus interest that they create magically, like magic, out of thin air. You don't own them. None of it. Okay? It's their system. It's a slave system. These are IOUs, people. But again, we can end the whole central bank system if we stop them from issuing one single dollar. Just one. It'll never happen. It will never, ever happen. I know a lot of people were hoping that President Trump was going to somehow do it. No. What did he do? He was calling for negative rates. He was calling for a weaker dollar. All right. And this current freak look, the spending spree, this is all a mechanism. Again, people, they don't care about you or me. All they want to do is inflate and create inflation. So when you're watching any of the mainstream financial channels and they're trying to tell you about how out of control inflation is, I need to explain something to you in a moment. I'm going to read to you. And how the central banks are really, they're trying to fix it. Nothing could be further from the truth. And you know that if you've been following this blog. So the mechanism is very simple. Central banks, ECB, Federal Reserve are really in a debt interest rate suppression scheme bigger than ever before. Look at the 10-year yield here in the United States. Market just closed about 2.80. It has no business being here. But again, this is central banks. This is the Fed getting in here, buying all the debt, keeping rates suppressed. That's all it is, but you're not allowed to know that. Why are they keeping rates suppressed? Because it creates an environment of risk. Get cash back into the stock market, period. And it seems to be playing out. If you noticed how this all started, again, with the big sell-off in the 10-year yield, market started to crater, unprecedented action by central banks, and look, market's loving it like this. Yet again, can't make this shit up. It's impossible to do. Anyway, so energy. Did you watch energy today? Natural gas up over 5%, crude oil over 2%. The energy sector putting on big gains here. You know how this works. Energy in aggregate is the lifeblood of the market, crude oil especially. And although we've seen crude oil drop under $100 a barrel, I can't imagine it's going to stay here, people. Just wait for the new false flag event that's going to occur. And for the next crisis, if it's not different variants of COVID, it's going to be monkeypox and different variants of monkeypox and polio and dog shit pox and whatever else they want to throw at you. Anyway, so as I said, market finished mixed, 10-year yield 2.80. It's an incredible phenomenon that we're watching here. We're seeing it with our own eyes, but again, what you're seeing, the mainstream is going to try to tell you is not real. We got gold and silver under pressure today. Cryptocurrencies under pressure today. The dollar slightly weaker. Now, let me touch on a little economic news here that look, what I'm going to read you is very sad, very, very sad. But again, it's not going to surprise you. So what do we find out today? Home foreclosures are skyrocketing. Loan defaults are higher across the board. No end in sight here. People can't make ends meet. Meanwhile, people are continuing to take on more debt. They're doing this, as you well know, so they can make ends meet. We keep hearing the same thing here. People can't make it in this environment of surging inflation by design. You think the Fed maybe missed its target of 2% just a little bit? You maybe think they're behind the curve. Actually, they're not behind the curve at all. This is what they've gone out of their way, not just the Fed, including the European Central Bank, to continue to manifest, to foster. And they're still doing it now. You all know that. It's not going to stop. So, look, no one knows the environment better than you do if you follow this blog. I mean, it's just in our freaking face here. What do you want to do? What do you want to do is really what it's all about. Me, I've been buying the market. I've been putting hundreds and hundreds and hundreds of thousands of dollars to work in this market. That's the truth. Okay, I'm back in here in a big way. I'm going to continue to buy here, and that's really the truth. I have not yet added to a new crypto position here. I'm still waiting. I want to see where that goes. Like I said recently, I'd like to see Bitcoin fall to around 21 and stay there a little while, and then maybe I'll get back in here. But the environment is pretty obvious to me. With central banks doing what they're doing, they want to create an environment of risk, more risk. I know there's, please, people keep emailing all day long. Greg, did you see what this guy said? Greg, did you say what that guy? I know there's the same guys who have been calling for a market crash for years, month after month after month. They're at it again. I know it, okay? I must have got 50 emails today on this stuff here. Look, the S&P 500 is out of bear market territory. With rates where they are right now and the 10-year yield where it is, there ain't going to be no crash here. We haven't had a crash. We've had a correction, but we've not had a crash. Is a crash coming? Absolutely. Will these people eventually be right? 100%. You know that, but it's going to start in the debt market. You see these crash callers? What they never explain to the people that follow their work, some of them who admit they're not in the stock market at all, okay? They're not explaining to people that the stock market is a derivative as to what is occurring in the debt market. If central banks, ECB, Federal Reserve, are in here buying all the debt, artificially suppressing rates, making sure we don't get that uncontrolled spike in the 10-year yield, which you and I witnessed with our own eyeballs. It started, central banks got in here, took some action, yield curve control, suppressing rates. Okay, everything's off to the races again. But again, the crash callers just don't understand that it's the debt market that's the driver. And the big meltdown that everyone is looking forward to, it's going to happen. There's no doubt about it. It's not going to start in the stock market. It's going to start in the debt market. You will know that. Eventually, we're going to get a massive sell-off in this debt market. Rates are going to spike in an uncontrolled fashion, and I think it's going to be allowed to happen. You understand? Then you're going to get a massive sell-off in the stock market, and cash is just going to move. It's going to move into commodities, people. The same story I've told you forever. Commodities, and in my view, cryptocurrencies as well. I'm not going to waver from that ever. I'm telling you my best take on it. That's how I see it playing out. Think about it. Right now, it's an environment of risk. It still is. When you have central banks suppressing rates, buying all the debt, unlimited, according to the ECB, Fed's doing the same thing and not supposed to know about it. That kind of an environment is massively stock market bullish. Earnings don't matter. PE ratios don't matter. Forward guidance. It doesn't matter. When you have an unlimited amount of cash being created out of thin air by central banks to buy the debt, keep rates suppressed, it's a deliberate act to push cash back into the stock market, risk on. Not risk off, meaning going into commodities, gold, silver, and even cryptocurrencies. No. That's what you're going to see here in this environment until we don't. And I think I've explained this to you for a million times, but the crash callers will never tell you that. Ask them. I know a lot of you follow the crash callers. Believe me, I know, because I hear from you all the time. Ask them if they explain to you that the debt market is the hyper bubble, where the big crash, and I'm talking about an 80% sell-off or better in the S&P 500 is going to occur. But it's going to happen when the debt market melts down, not before that time. So don't sit there wondering when it's going to happen. We know already. We witnessed it with our own eyeballs when we had that sell-off in the 10-year yield, about just over 3.5% in the 10-year yield. We had 2 days of nearly 800-point drops in the S&P 500. You see how it works? Then central banks, oh no, we're not going to let that happen. No, we're going to buy it all. And that's what they're doing. I've been telling you that central banks are going to buy it all since I don't know how long. It's not going to stop. It's not going to stop until they're done slaughtering people, until they're done eliminating an entire class of people. What they're doing right now is massively inflationary. You're not supposed to know that. All you're being directed at is what central banks are doing with regard to the overnight rate. Oh, we're going to raise rates to zero. Oh, the Federal Reserve is going to raise the federal funds rate a whole 75 basis points, and they're really, really, really concerned about, reining in inflation. Bullshit, okay? You all know that. It's the biggest scam, lie, deception on the face of the freaking earth. All right, people, with that said, I'm going to let you all go. I hope I covered some important things for you. I think you understand what's happening. Stop looking for the crash. Stop listening to any person out here who's not explaining to you that the big crash is going to occur in the debt market first. Yes, we are going to have corrections, 20, 25% in the stock market. Absolutely. That's normal. Okay, but the big meltdown, 50, 60, 70, 80%, that's not going to happen until the debt market implodes. Period. The end. It should make sense to you, being that you understand the debt market is the most rigged aspect of the market, being pumped by central banks to prevent the stock market from cratering. Stock market has no business being here. Our economy is in free fall. The stock market should be half of what it is right now or less than that. But action of central banks will not allow that to happen. They are determined to keep inflating the debt bubble, keep the stock market artificially inflated by keeping rates suppressed. That's the story. I think you all know it. Love you a lot. Please share the video. See you in the morning.